Welcome back to the another IPO, which is coming to the Indian stock market. And today we are going to take a deep dive into SBI Fundamental Management Limited, one of the India's largest asset management companies. Now, here's some interesting thing that almost every investors in India has heard of SBI Mutual Fund, but very few know the company managing those mutual fund is now coming to the stock market. So the big questions are, is this IPO worth applying for? Can it deliver listing gains? Is it suitable for long-term investment? And most importantly, is this valuation justified? In this video, we will cover everything you need to know from the company business model and financial performance to advanced technical analysis, strength, risk, and our financial investment verdict. So first, we are going to the company introduction. So SBI Mutual Fund Limited is the one of the India's leading asset management companies and manages the SBI Mutual Fund business. It is promoted by the State Bank of India along with Amundi, one of Europe's largest asset management. The company earned revenue by managing investors' money across equity mutual fund, debt mutual fund, index fund, portfolio management service, offshore fund, alternative investment fund. Unlike banks, which earn by lending money, an asset management company earn management fees based on the asset under management, which is AUM. As AUM grows, revenue and profitability can grow without a proportional increase in operation cost, making this a high scalable business model. So first we are going to discuss about the business model analysis. Let's first understand how this company make money. Unlike manufacturing companies, there are no factories, no raw material, inventories, commodity price risk. The company's price asset is investors' trust. Revenue is generated through management fee charge on the asset it's managed. As long as AUM continue to grow, revenue has a potential to grow consistently. This asset light growth generally support higher profitability and a strong cash generation. Position. The Indian mutual fund industry has experienced rapid expansion over the last decade, supported by risking financial awareness, increasing SIP participation, digital investment platform, higher household financial savings. With one of the largest distribution network through SBI and a strong brand presence, the company is well positioned to benefit from these structural trends. Scalability analysis. So one of the biggest advantage of the AMC is scalability. Imagine the company manages 10 lakh crore today. If the company grows to 15 lakh crores over the next few years, it doesn't need 50% more employee or offices. The same platform can manage significantly larger asset with only modest increase in operating expenses. This create operating leverages where profit can grow faster than revenue. Margin analysis. Asset management companies typically enjoy strong operating margin because fixed costs are relatively stable. Additional AUM contribution disproportionately to profit. Capital expenditure requirement are very low. As long as the company attract new investor and retain existing investors, profitability remain same. So this is the another important thing which we have to note. Next one is cash flow analysis. Cash flow quality is one of the biggest strength of the AMC. Unlike manufacturing companies, there is no inventory buildups, minimal receivable risk, limited capital expenditure. So management fees are regularly leading to strong operational cash flow and a cash generating business model. And next one is return on capital analysis. Because the business required relatively little physical cash capital quality, AMC often registered high return of equity ROE and high return on capital employed ROCE. This reflect efficient use of shareholders capital and the ability to generate strong earning without heavy investment in fixed asset. Next one is brand strength. Brand play a crucial strength in asset management. So SBI Mutual Fund benefit from SBI national wide distribution network, high customer strength compared to any of the company. And next one is extensive branch reach. So wherever you go in India, you can get that service. Strong retail presence, institutional investor relationship. These advantages creates a significant competitive moat. So next one is risk analysis. Despite its strength, investors should understand the key risk. First one is market risk. Revenue dependent on AUM during prolonged market decline, lower asset value and investor withdrawal can reduce fees income. Regulatory risk is SEBI periodically revise expenses ratio and regulation. Lower premisable fee can directly affect profitability. This we have to really keep in our mind. Competition. The company compete with other large AMCs such as HDFC AMC, Nippon India AMC, ICICI Prudential AMC, Kotak, and Axis. Maintaining market share will require continuous product innovation and strong investment performance. Valuation perspective. So for AMC business, investors should evaluate price to earning, price to book, AUM growth, market share, dividend protection, rather than focusing only on revenue. Compare the IPO valuation with listed peers to judge whether the issue is fairly priced. This you can do after coming to that market. So next one is stock technical analysis that we cannot able to do so far. We are going to ignore that part also. From the business quality perspective, SBI Fund Management Limited stand out as a high quality asset light financial service company. It earnings are driven by AUM growth rather than manufacturing output, giving it strong scalability and the potential for sustained profitability. Supported by the trusted SBI branch and Amudi's global expertise, it operates in a sector with long-term structural growth prospects. However, investors should remember that AMC earnings are closely linked to capital market performance. During weak market cycle, AUM growth and fee income may slow. Therefore, the IPO should be assessed based on its final valuation relative to other listed asset management companies. This is a type of business that appeal to long-term investor if the IPO is priced reasonably, as it combines a scalable asset-light model, strong brand equity, and exposure to Indian growth mutual fund industry.